Hey everybody, welcome to Finance with Abram, where I help you make the most out of your money. Today, I'm diving into the world of no penalty accounts and ranking the top 5 based on their APY, annual percentage yield. Whether you're saving for a rainy day or just want to grow your cash without the hassle, these are some accounts that could have you covered. And also, before I jump into the list, I'm going to talk about some of the things that all of these accounts have in common, so I'm not repeating the same thing for each account. And then when I get into the list, I'm going to give you a calculation example of the APY and the term of the CD, so you get an example of how much interest you can earn with the CD based on a certain amount of money in it, and also some information on the financial company itself. And the video is organized into sections and chapters, so you can skip ahead or around or however you want to. And every other month or so, I'll also do videos on the top CD accounts ranked by APY and top savings accounts ranked by APY. So check out the playlist of those. I have a link down in the description for that. If you like these type of videos in this video, definitely give a like on the video below and subscribe to the channel if you're not. And before we jump into the list, let's go over some of the important things that all of these accounts have in common. First up, and most importantly, all of these accounts in this video are either FDIC insured or NCUA insured. For the banks that I'm talking about in this video with CD accounts, they're going to be FDIC insured. And the credit unions that made it to the top 5 list are NCUA insured. I'm going to tell you about both of these. FDIC insured, very important, Federal Deposit Insurance Corporation. The banks in this video have FDIC insurance on their CD accounts. And so FDIC was an independent agency created by Congress during the Great Depression to instill safety and security and confidence in the banking system. And what they do pretty much is they protect your deposits in accounts up to $250,000. So if something would happen to that bank or financial institution with FDIC insurance, they go bankrupt, they go under, collapse, anything like that, the FDIC insurance would step in and pretty much give your money back to you. Any bank that's had that FDIC insurance that's gone under, customers at banks with FDIC insurance have never lost their funds. So there has definitely been banks that have collapsed, gone bankrupt, pretty much had to, shut down. And the ones with FDIC insurance, customers that had their money there, they were made whole through the FDIC insurance. Now, most banks and financial institutions with FDIC insurance don't collapse, but if they do, and if some of them have, then FDIC insurance would step in. And now NCUA is the National Credit Union Share Insurance Fund that was created by Congress in 1970 to insure members' deposits in federally insured credit unions. Each credit union member has at least $250,000 in total coverage. So it's the same amount pretty much typically as FDIC insurance. And the Share Insurance Fund also has the backing of the full faith and credit of the United States. And credit union members have never lost even a penny of insured savings at a federally insured credit union. So very similar to FDIC insurance as far as the amounts and the backing and the security of it. Now, next up, all of these APYs in this video are fixed rate APYs. So that means they are going to stay the same for the entire term of the CD, whether it be 6 months, 4 months, 11 months, 13 months, whatever the term of the CD is, that APY will stay the same month to month, day to day, week to week. You don't have to worry about it changing, dropping down, or anything like that. Now, if that CD drops their APY for new customers, down 0.10%, down 1% or something like that, that's not going to affect you because you already have that APY locked in. Now, on the other hand, if they raise the CD for new customers, then that's not going to affect you either. However, that's a little bit more unfortunate because you have that rate locked in at that, let's say 4.50%, and then they offer 5%. Well, you're still at 4.50% while they're offering 5%. So it goes both ways. It works for you and kind of, I guess, not really against you, but you know what I mean, kind of a pro and a con to that. However, these are no penalty CD accounts, which means you can, take your money out after that sometimes they have a lockup period, that 7 months, 30 days or something like that, initial lockup period. But after that amount, you can withdraw your whole funds and then open up a new CD with that higher APY if you want. But that fixed rate works more in your favor, especially in an environment and an economy like we're in now, where the federal funds rate's kind of staying the same, kind of staying stagnant for a while. However, there's been mentioning of 3 cuts or so in this year, 2024. So typically when the Fed funds rates decrease and there's cuts, then savings rates and CD rates go down. And I talk about that more in depth in the history of that in my video, federal funds rates versus CD and saving accounts rates. So check that out. I'll link that down in the description. But yes, all of these accounts in this video have fixed rate APYs. Also, there are no monthly maintenance fees with any of these accounts in this video. So you don't have to worry about a certain $5, $10 or anything like that charged to you every month just to have the account open. No monthly maintenance fees at all with any of these accounts. And also there's no early withdrawal penalty, which is what make these accounts no penalty CD accounts. And I talked about that more in the beginning of the video. So yes, after that initial period that they may be locked up with your funds for 7 days, 30 days or whatever,
After that, you can withdraw your full amount, including the interest from these CD accounts with no penalty. You don't have to worry about getting hit with 180 days worth of interest or any kind of fee or penalty fee or anything like that. No early withdrawal penalty for any of these accounts. Now, with that being said, there is no partial withdrawals permitted for any of these accounts. So you can't withdraw a part of your deposit or anything with these accounts. Sometimes they have it where you can withdraw the interest that you've accrued, month to month or something like that. However, you can't withdraw part of your initial deposit in these CD accounts. Now, you can withdraw the full amount with the interest, like I just stated previously in the section about the no early withdrawal penalty. However, you can't withdraw like half of the CD here this month and half of it the next month or something like that. So partial withdrawals of the principal are not permitted with any of these accounts.
And now that we've gone over that, let's get into the list, starting with an honorable mention. In the honorable mention I wanted to talk about on this video that almost made it into the top 5 is the Marcus by Goldman Sachs 7-month, 11-month, and 13-month certificate of deposit at 4.70% APY. So yes, they have 3 no penalty CD accounts at 3 different terms, 7 months, 11 months, or 13 months, all at 4.70% APY. And there's a $500 minimum deposit required to start the CD account, and the interest is compounded daily and credited monthly. And a full withdrawal may be made 7 days after funding. Some calculation examples for this CD: if you have $50,000 in the 7-month CD with the interest compounding daily at 4.70%, after that 7 months, that $50,000 would be about $51,356.75. Now for the 11-month CD with Marcus by Goldman Sachs, $50,000 in it with the interest compounding daily at 4.70%. After 11 months, that $50,000 would be around $52,148.50. And for the 13-month term CD, same amount, $50,000 at 4.70% with the interest compounding daily. After 13 months, that $50,000 would be about $52,548.94. Marcus by Goldman Sachs is an online bank that offers a savings account and multiple term CDs. Marcus by Goldman Sachs is a brand of Goldman Sachs Bank that was launched in 2016. Goldman Sachs is one of the largest banks in the United States by total assets and was founded in 1869 in New York, New York, where their headquarters still remains. Let's get into this top 5 list here. And this account and the rest of the list of the top 5 are all offered by SaveBetter by Raisin. And I'll go into more details of what that is if you're unfamiliar with Raisin at the end of the video. And I have that organized into chapters like I stated at the beginning of the video. So that section right there is separate. And you can jump to it right now if you want to learn more about it before you learn about these accounts on this list. Or you can learn about the accounts and then jump to that, however you want to do it. But I'm going to go into more detail of what SaveBetter by Raisin is at the end of the video in case you're unfamiliar with it or just want to know more about it. At number 5 is the Bank of California 18-month certificate of deposit at 4.71% APY. There is a $1 minimum deposit required to open this account, and the interest is compounded daily and credited monthly. Full withdrawal may be made 30 days after account opening. Calculation example for it: if you have $50,000 in this 18-month CD at 4.71% with the interest compounding daily, after 18 months, that $50,000 will be about $53,571.57. Bank of California was founded in 1941. After merging with PacWest Bank Corp in November 2023, Bank of California became the 3rd largest bank headquartered in California. Bank of California offers a broad range of products for commercial, business, and personal banking. Their headquarters is in Los Angeles, California. And at number 4 is the Sallie Mae 14-month certificate of deposit at 4.75% offered through SaveBetter by Raisin. There's a $1 minimum deposit required to open this account, and the interest is compounded daily and credited monthly, and a full withdrawal may be made 30 days after account opening. Calculation example for this one: if you have $50,000 in this account for 14 months at 4.75% APY with the interest compounding daily, after 14 months, that $50,000 would be about $52,781.08. Sallie Mae's scope of business has changed drastically since they were founded in 1972. Initially, they were a government entity that serviced federal education loans, and since then they became private and began offering private student loans. Sallie Mae also offers various savings deposit products. Their headquarters is in Newark, Delaware. And at number 4 is the Tech CU 5-month certificate of deposit, and that APY is currently at 5.15%. It was at 5.36% the last time I did this no penalty CD accounts ranked by APY video, but since then they have lowered it from 5.36% down to 5.15%. And this CD is offered through SaveBetter by Raisin. There's a $1 minimum deposit required to open it, and the interest is compounded daily and credited monthly. And a full withdrawal may be made 30 days after account opening. Calculation example for this one: if you had $50,000 in this 5-month CD at 5.15% APY with the interest compounding daily, after 5 months, that $50,000 will be about $51,056.77. Technology Credit Union was formed in 1960 by some employees at the Fairchild Camera and Instrument Semiconductor Division. They offer deposit accounts, loans, wealth management, and more to their members. TechCU headquarters is in San Jose, California. And at number 2, we have the Ponce Bank 4-month certificate of deposit at 5.20% APY. And the last time I did a video of the top 5 no penalty CD accounts ranked by APY, this CD was at 5.30%, but since then, a few months later, it has been lowered down to 5.20%. And this CD is offered through SaveBetter by Raisin. There's a $1 minimum deposit required to open this account, and the interest is compounded daily and credited monthly. A full withdrawal may be made 30 days after account opening. Calculation example for this one: if you had $50,000 in this account for 4 months at 5.20% with the interest compounding daily, after 4 months, that $50,000 would be about $50,852.12. Ponce Bank was founded in 1960 in the Bronx of New York by migrants from Puerto Rico. They are a certified CDFI Community Development Financial Institution and MDI Minority Depository Institution. Ponce Bank offers personal and business banking services, including checking accounts, savings accounts, and loans. Their headquarters is in Bronx, New York. And at number 1 is the Mission Valley Bank 3-month certificate of deposit at 5.25% APY. The last time I did this no penalty CD accounts ranked by APY video, this CD was at 5.35% APY, but some months later it has been lowered down to 5.25% APY. And this CD also is offered through SaveBetter by Raisin. There's a $1 minimum deposit required to open the account. The interest is compounded daily and credited monthly, and a full withdrawal may be made 30 days after account opening. Calculation example for this one: if you had $50,000 in this account for 3 months at 5.25% APY with the interest compounding daily, after 3 months, that $50,000 would be about $50,644.07. The total interest earned of around $644.07. Mission Valley Bank is an independent community-owned bank founded in 2001 with a headquarters in Sun Valley, California. When they started, they were the first new independent bank in more than 4 years in the San Fernando Valley. They offer various commercial and personal banking products and services. And this video isn't sponsored or anything, but I do want to tell you more about SaveBetter by Raisin in case you're unfamiliar with it and want to learn more about it, because as you see with this list, all of the accounts in the top 5 list are offered through Raisin. So let's get into that.
Raisin works with over 30 insured banks and credit unions to offer high rates to various markets. But some of these banks and credit unions don't have the ability to have their accounts available nationwide, but they want to reach more people, so they want it to be available nationwide. This is where Raisin and SaveBetter comes in. They work with these community-focused banks and these various other credit unions, different kind of banks, to offer their, different accounts nationwide, whether it be their high-yield savings accounts, their money market accounts, or their CD accounts, the one-stop stop that you can go to open an account with them and then have access to these high yields offered through these other banks that you typically wouldn't have access to if you're not in their market, in their local area or something like that. And at SaveBetter themselves, they're not a bank. They're pretty much like a digital storefront where the banks and credit unions can promote their deposit products. Like I was telling you, those banks and credit unions, they want to get their products and their accounts out to more people. They'll use SaveBetter as pretty much like their digital storefront to get the word out for them and kind of organize it and everything and have the accounts. So your money is still actually in these banks and credit unions, but your account is linked to the banks through SaveBetter. Basically, there's a digital platform that gives people access to a variety of deposit products through a single account. And then SaveBetter customers, they use the platform to fund these FDIC insured products offered by various U.S. and United States banks and credit unions with a wide range of maturities and APYs, annual percentage yields. So SaveBetter is operated by SaveBetter LLC, a 100% subsidiary of Raisin GmbH, which is a trailblazer for open banking in deposits and investment space. In the United States, Raisin helps banks and credit unions improve their deposit funding by offering national reach for their retail deposit products and provides savers with better access, more choice, and higher convenience when evaluating savings products from FDIC insured banks and NCUA insured credit unions.
And there you have it, folks, the top 5 no penalty CD accounts ranked by APY, including an honorable mention. These accounts not only offer flexibility, but also help your savings grow at a high APY without any nasty surprise of a penalty fee. And these accounts can offer you the best of both worlds, easy access to your money and competitive interest rates. If you got any questions, comments, or tips, leave them down in the comments below. If you found this video helpful, don't forget to give it a thumbs up, subscribe to Finance with Avern, hit the notification bell so you never miss an update. Thanks for watching. Until next time, take care.